Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Volatility is coming and hitting the market again. You've seen the S&P taking out that October low below 2,600. Now, we've looked at 2591 as a point of stabilization. You're starting to see a little bit. The S&P did get back above 2,600 after trading down to 2583. Now, everybody's looking at this as a new low, taking out that October low, and it means the market's rolling over. Well, it doesn't necessarily mean that. You can take a look at the NASDAQ. The NASDAQ did take out that October low in Thanksgiving, and then it has actually been more constructive here. So really, you want to take a step back. You want to look at where this market was in April. You want to look at it in May. 2591 was that low on May 3rd for the S&P, and then you got to remember it traded down below somewhere around 2580 for quite a bit through April. So there's a lot of volume that's traded in this area. This doesn't mean the market's rolling over. We put the levels out in the Morning Express, but some of those are being taken out. So you just want to look around 2580 to 2590 as that area that you don't want to see it just continue to trade down through here as the day is developing. And then any sort of close above 2603 would neutralize today's weakness, but not the overall weakness on the tape. And then lastly, we've referenced it multiple times, the Dow brings a line in the sand for us on a technical indicator basis, and that's held so far, especially on a closing basis, but it is getting tested here today, so that's going to be important to watch. We talked about it in the Morning Express, and we will reference that in tomorrow's Morning Express. Give us a call if you want to talk about it. Moving on to crude oil, it has given up those gains from Friday. OPEC cut their production, but overall the global risk environment is not favorable for crude in that recovery mode. Not only that, you have to remember, we saw 10 straight builds on inventories for 10 straight weeks in a row, and last week it finally broke it. Now inventories are coming back into the picture again, and given the global risk environment, it's not favorable heading into those inventories. Longs are just hitting the sidelines. Look for $50. If it stays constructive above $50, could give you a good entry point if the inventory data gives you such an entry point as well. But lastly, touching on dollar, touching on gold, gold is holding well. It's up here against some strong resistance. Now, our rhetoric has been one, don't chase it. There's going to be opportunities to buy pullbacks. As well, the dollar is moving higher today. The British pound is getting crushed. But the fact that the British pound is down due to Brexit, it's also helping gold. But one thing that no one's talking about, again, is that Chinese yuan. It's given back the bulk of those gains coming out of that summit at the summit meeting. So watch that yuan. If the yuan continues to weaken, then it's going to drag gold with it. But that would be a good buying opportunity for gold. The Fed's going into the quiet period. You got the Fed meeting next week. You have the ECB this week. So the currencies are going to be in play. Gold we like, but wait for those pullbacks to buy. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.